Hello and welcome to the Living on the Hedge Group's presentation of our final portfolio management report. At this time, we will display our identification. All right, great. So first, we're going to start with an overview of the project, move into an explanation of our security selection portfolio construction, review our performance evaluation and conclusions, and wrap it up with some thoughts about if we could do it again. So our mission was to construct a market-neutral hedged portfolio that paired long and short positions using weighted betas. The foundation behind this idea was to manage market risk while still generating a profit. This can be done through beta neutrality, in which one invests in securities that offer little to no correlation with the overall market's direction. In addition to beta neutrality, we also paired investments in long-short sets that correlated with each other. The short positions were intended to be overvalued investments that could be bought high and sold at a higher price, after which the profits could be used to buy at an expected subsequent low. Meanwhile, long positions were intended to be undervalued investments that could be bought low and grow steadily over time until they could be sold at a high point. A final note is that unusual influences on the markets, including the ongoing pandemic and the US election season, both affected our security choices and our results, which we'll talk about again soon. For now, I'll hand it off to Steve to talk about our security selections.
Hi, I'm Steve Schukert, and let's talk about security selection process. We're going to check out a table of our initial portfolio, which will show you the various securities that we did end up selecting. So Allison talked about some of that process. We needed to basically divide up our portfolio with different sectors. We've got commodities, real estate, currencies, and communications included in that portfolio. Going a little more in depth, you can see under commodities, we went with gold, symbol GLD, Boise Cascade, BCC, Vanguard ETF, which is real estate, VNQ, along with the Simon Property Group stock, which is SPG. For international currencies, we looked at the yen, which the symbol is FXY, and the Swiss franc symbol FXF. And then we needed a couple of utilities, communications, ETF, IYZ, and fiber optics communications ETF under symbol VOX. So in the selection process, we wanted to look at items that could be really affected by this strange year of COVID-19 pandemic in 2020. So we tried to identify a couple things at least that may be affected positively or negatively by this pandemic. So we figured gold would be very stable and steady, as it's supposed to be in rough times. Boise Cascade, a lot of people are building, so we looked at possibly that they would start to do better. Under real estate, again, thought that might have some variability, some movement, and we tried to pick some stocks. Simon Property Group has more in large retail malls, so we shorted them, looking at basically what kind of real estate they had. Under communications, that was rather challenging because there's a lot going on with communications right now, especially in the pandemic, but we thought that maybe fiber optics might be one that may have more adversely affected by this pandemic. So we looked at three things. We had to look at correlation within the pairs. We needed to decide which ones were long and short, which I talked about a little bit already, and then the overall neutral beta we were trying to achieve. You can see the correlation within the pairs is decent. This is a 60-day correlation or 60-day time frame for the correlation. We have seen that longer correlation, or longer time frame that pushes back before the pandemic, yielded some better correlation between them. Real estate, for instance, the correlation on a 10-year time frame was far better than on the 60-day, close to 1.0 at one point. And at that, our neutral beta, that's right, we were looking for our neutral beta, which is 0.65. Initially, using Yahoo data, that was at 1.2. It was pointed out that might not be the best source, so finding a different source gives us a neutral beta of 0.65. And at that, I will hand it off to Phil for the performance evaluation. Thank you.
Thanks, Steve. So I'll be talking about our performance evaluation. Give me a sec. We got to scroll down to it here. We got all of our tear sheets on our individual stocks there. So yeah, here's our performance evaluation where we ended up. One of the biggest things that kind of saved us was Simon Property Group actually took a big hit throughout this time period. It kind of actually resulted in a $1,000 gain on our aspect here. We had 270 shares, which is the most amount of shares out of any of our assets in that Simon property group. So that was really the big hitter on our project here and what saved us in the end. We actually ended up with a 0.3% increase over our starting amount. So we did pretty well there as well. Scroll down here to our batting average table. So you can see in our long positions, out of the 4 that we had, 2 of them were winners, which means that the stock price went up. So we ended up with 50% average there. In the short position, we ended up with 3 winners. 3 of those lost market value during the time that we were recording. Just one of them went up. So we did rather well there as well. Between our correlation pairs, 2 winners, 2 losers, so 50%. And over our whole portfolio, 5 of them were winners. And, out of the 8 that we selected, so 62.5%, not too bad. We'll scroll down here and I'll give you another graph that just gives you a little bit better of a understanding of exactly what happened here. So this graph, will blow it up a little bit here, shows just how much we earned and lost in each one of those. So you can see here, Boise Cascade, SPG, FXF would be the Swiss franc. They were all winners on our short side. VOX was the loser there. He lost this kind of a bit of money, and the price of gold actually went down during our analysis here as well. Those are our 2 big losers. Kind of takes up most of what our SPG won us. IYZ a little bit on the downslope as well. Overall, not too bad though. So Steve touched on this a little bit. There we go. Fit it all on one page here. He was talking a little bit about how we selected some of these assets. And one of the big things we looked at was total expense ratio. We did pretty good in trying to keep them relatively low. You'll see that all of them are under 0.42. That would be IYZ with the highest there. We got some Vanguard stocks in there, Vanguard ETFs in there with a relatively low expense ratio. And then our 2 individual stocks, obviously with that 0% expense ratio. So what you see here in this table, we've got our final investment, our initial investment, the total return with our expense ratio factored in there. It'll show you the gross here of how much we earn. And then obviously you take your short and long position, and you'll get your gross total there. And then our after tax, we ended up profiting $267.47. As Kim kept saying, it's a small win, but we'll take it. But anyway, we'll pass it along here to Kim for our final aspect on what we could do again.
Thank you, Phil. So there's a number of things that we would have done differently if we were to repeat this project today. The first is that we might choose long positions with paying dividends and short securities that don't pay dividends. It turns out that 3 of our shortest securities paid dividends over the experimental period. These were BCC, SPG, and VOX. While only two of our 4 long positions paid dividends. Looking back, we could have ensured that all of our long positions offered high dividend yields and none of our short positions offered dividends. Secondly, in retrospect, some of our securities would have performed better had they switched places. GLD and BCC are perfect for this example. While both of them experienced a loss, GLD had lost more and would have been better in the short position. As it stands, we went long on GLD and short on BCC. Additionally, as the pandemic stretched out longer, VOX would have done better in the long position and IYC in the short position. We think this would have reflected schools and businesses' ongoing robust use of telecommunications. Third, while we did attempt to choose securities that offered lower expense ratios in order to improve our ultimate profits, when we were creating our holdings report, I'm not sure that we knew to ask all of those questions. And there were occasions where we had to focus on betas and correlations, and those took precedence over selecting securities strictly that had lower expense ratios. I think ultimately we would have balanced all of these factors better overall had we looked into that. We also would have used better sources for our beta data. As Stephen mentioned, initially, our beta was 1.2 based upon information from Yahoo Finance. When we went to Portfolio Visualizer, we calculated a beta of 0.65. Either way, if we had spent a little bit more time on this, we would have preferred to have a holdings report with a lower beta. Using better sources for our beta data would have yielded a more accurate beta model to create a more beta neutral portfolio. And then finally, we could have investigated our data sources and our methodology more closely and asked more questions during the creation of our portfolio holdings report to reduce the amount of discrepancies that we ultimately discovered at the end of the project and when putting this paper together. For instance, the Swiss market appears to be highly volatile when we looked back further. There was actually about a 2,800 point drop during their initial coronavirus outbreak from February to May, which makes it an incredibly volatile ETF. And looking back a few more months would have shown that we might have actually avoided the Swiss franc altogether. We all agree that diving deep during security selection would have improved our outcomes overall. And this concludes our presentation. Thank you for coming on this journey with us. That we're able to share our reflections with you today is the beauty of learning. So thank you very much.
Thank you.
Thank you.